program anyway because it's great to have someone to bounce trade ideas off of. And even if you can't agree on stuff, it's good. It's constructive criticism at your fingertips. And then
Absolutely.
for our viewers, it's even better. You get two really good analysts to be able to put their heads together and provide some pretty killer trades. So we're looking at crypto kind of coming down a little bit. I've got a 92K target on it short term. And I know Big Beat was saying it could go to 63 at this point.
He was more joking than
Yeah.
anything else. He's more looking for that retrace. It's holding up. Personally, my opinion. I brought it up today on the morning show that we do. Hash ribbons is something that I watch a lot. It's when the miners, what are they doing with the hash rate? And what we've seen is the 30-day MA just moved across the 60-day MA. That has been historically a sign that means the Bitcoin miners feel optimistic about what is the price of Bitcoin going to do. So they're increasing the amount of computing power they put against that. We saw it last in October of 2024 when we moved from 73 to over 100. So I'm, of the opinion right now that I would keep an eye on things. If we move to the upside, any break above that 104 level really could send you catapulted. But right now we're range trading. 90,000 to 100,000, and I'm happy in that range. I'll trade it all day.
Pretty much. I don't know how my box collapsed here. We're still looking potentially at a massive bull measured move, but this is the time where consolidation tends to happen, and when we have range to scalp, we're gonna scalp it. So, I think that it can go anywhere from this point. We've had plenty of reversion opportunities. We've had plenty of scalp opportunities within this range, and then to boot, all the connected equities to this has just been, an absolute steady stream of day trade setups. MST or MSTR, and I like to trade. I'm looking to trade MSTU. Eventually, I'm a little nervous about that, and I'll show you why in a minute. But first, I'm looking at this really nice little roundy here on our current Bitcoin chart, and this area is interesting to me because it's both a consolidation point, and it could reverse here for at least a short liquidity grab. And that's what I'm thinking is the scenario is we're looking at this. Everybody else is seeing this too. If we were to start looking for where a liquidity trap would be, it would be right in the edge of our secondary block overall. And then it would do exactly this. And you can see it broke down here. It reached up to it. It may bounce off this level, hit that again, and then hit that 92 target. And then, I know it's jokingly, but we're looking at that, it could go to 63. It's possible. That's where our support is. It's all the way down here. But for now, I think
people that have that, it always fills the gap thing, are sort of pulling that as the area that we gapped up from as the ultimate first level of the upward move. I'm not buying it for $1. Let's put it that way.
I'm with you on that. I mean, it's everybody says all gaps fill, and we're different. We're outsiders when we say this, but all gaps don't have to fill, guys. They can simply be thought of as a primary in a measured move scenario, and that's what I'm looking at. Like literally,
exactly
right here.
A half measured move back. That's what we're seeing across everything, right? When we closed the markets yesterday, we were up 1.2% on the QQQ. We woke up this morning and we were down 61 basis points, almost exactly half measured move back.
Right, and it was I'll get to that chart in a moment here, but just mainly short-term volatility is a must in this scenario, and we know where all these targets are. My chart's a mess. It's got all kinds of blocks and charts in it, or blocks and pivots in it. But ideally, we're within reason of being able to find very quick scalp targets, and also keeping in mind the context of the long-term projected measured moves, either half back or whole measure move or half measure move in the direction.
But anything down around that 91.50 area that we've seen ourselves bounce down to the last time was on February 3rd.
Right.
That's when I'm a big buyer at that spot for the bounce back. The wicks have just been too quick right now.
Agreed. And we're looking at this point. If you look at the daily chart and even the 4-hour chart, kind of spells it out. This may be a bit of a rounding. A lot of people see it that way, but see it in another light here. This can also be a bear flag, and it walks like a duck and talks like a duck at this point. There's your liquidity grab, and here we are melting through that zone of where I would like to. I used to call these the pop and drop bear flag, where you get the liquidity and then all of a sudden the bears just rush it down, and they make a full measure move down typically. In this case, we have the high low here. Primary splits that difference. It goes to the bottom of our liquidity zone, which is
Yeah.
91. My target for taking profit on a bear move, if it breaks this range, would be 92. I like to stay within reason to where I know I've got liquidity to get out of my positions. Whereas,
Yeah, I'm not trying to pick up a nickel in front of a steamroller.
right, and some people make the mistake of going to that, and there may have been limit orders in this entire wick that didn't get filled because they had that
Absolutely water.
same target.
Absolutely water.
So I like to stay within
That's a
reason and
great point. That is a great point, Jeremy.
make sure you utilize that liquidity. It's what it's there for, and being able to identify where those reasonable liquidity zones are, that's ideal. And I always kind of mark that out on my 2-hour chart anyway. I always take advantage of knowing about where those liquidity zones are. And this is a really old one, by the way. It goes way back into this range here, but the idea is all the same. It's all about finding the liquidity, taking your reasonable profit zones, and moving on. You don't have to always be in a position, long or short. You ideally want to be able to be able to rinse and repeat and keep playing the game and keep making those base hits. They add
Yeah.
up. It doesn't take long. Let's go into QQQ now that we mentioned it. And I like QQQ. It's one of my favorite charts right now because two things. One, this looks like a very nice cup at the top of a bull trend so far. It's making out the handle part of it, as you would call it, here in a shorter time frame. And it's also staying within a range, high to low range, liquidity zones abound. And we're bouncing off the middle, coming up into today. We basically A to B the entire range right to the fib level and back. We could go either way here. Um, Gravity's kind of taking us towards the upper end of this liquidity zone here. Um, at the time, it's kind of oozing into a slow moving trend right now. We can see it's grinding its way up from this high point. It's given up all of the pivots that we like to map out in it. We're mapping this out in a day trading room this morning. But where does that leave our handle? Well, this channel, and it's huge. And we've got lots of different news events coming out from the Fed. We got Jay Powell giving testimony and all this other stuff going on. That's expected. We're going to have some broad range here that I think is going to probably wedge out right around the center here, around 526. That's why I marked this area out. Do you see anything bigger on the horizon that we should worry about? Well, yeah, we've got Nvidia earnings next week, but what else is on the ballot here?
You got PMI and CPI next 2 days.
Right.
That will move it. But to me, we've been stuck in sort of these ranges. We're not ready to break out. I don't think you get any impotence out of those two economic calendar events. I think, like you said, earnings report's going to be the thing you want to worry about. Any of the Mag 7, and we're clear till Nvidia, to my knowledge.
Right. And we're pretty much at the mercy of Nvidia in this point. And then the other gorilla is Netflix, but good Lord, that thing's extended. It's always extended.
Well, and this Tesla turnaround, I have it, I don't know if you're going to look at that later, but I definitely have had a downside target I've been talking about on that for a while.
Yeah, let's look at that. And I can agree with the downside on Tesla. It definitely extended a little bit beyond where I would expect it.
We're almost there. I think 330 is its next level of support, and you can see why. To the left side where you have that made its first measured move up. That's right at that measured move, right?
Yep, right in the split. And it can deviate a bit above and below that range, as you can see. Like when I say reasonable, I always take my primaries. If I see a consolidation, I split the difference for the edge.
Right.
In this case, I biased it a little higher because we had a lower low and a higher high all in the same move. So splitting the difference is roughly where that pivot is there. That I meant to have it 335 instead of 337, about that range. But ideally, as I was saying with when we're looking at Bitcoin, if you find reason within liquidity zones and you're not the last one holding the bag and you actually get out in strength, that's the idea here. So if you were short Tesla to this point, this is where you're ideally going to target getting out with liquidity. And like I said, sometimes those wicks will happen so fast, even though your limit order's been there for days, it can get run over. It happens.
Absolutely. Yeah. Yeah. Especially on something like Tesla, like Bitcoin, like we said, where there's so much movement where you see gaps within, even a 3 minute candle sometimes.
Yeah.
There you definitely have that. But yeah, I was on last week on Prosper's show, and at 370, I was still saying, I'm not a buyer because I can see this 330 mark. And if you lose 330, again, and the craziness, like we just talked about Bitcoin, you're looking at 270 at the 200-day MA as the next support level that I see, and it does fill the gap.
It does, and it's stupid fast.
Yeah, so that's what's crazy about it right now. So that's when you ask, what could move the Qs? Tesla could definitely be a big part of that. You've got 20% more downside here from a technical perspective if it breaks below 330.
Right.
And on the same way, if 330 consolidates here for a little bit, a day or two, it could be the impetus to see the turnaround. We're at a pivot point, a very pivotal one for one of the Mag 7.
Yep. And it's not just the bigger ones; it's a lot of the smaller ones are kind of following suit. Heck, even
from
the Russell,
there, it will take everything with it.
Even Russell, and then you guys all know about my TNA wheel trade, and I'm, pretty much looking at the same scenario. It's in the middle, but it can go either way. If it goes bearish, it's a big ass 1-for-1 measure move down here to like 32, 33. That's possible, but I'm still playing it. Within reason, it's got the range. I can sell plenty of premium on this thing and make up the loss. My overall is well below 32. It's like $19 for overall. I can carry.
Nice.
I'm looking years down the road with this one, not just in the recent year, but years and years. I want to make premium on this thing all the live long day.
Love it.
But it comes to reason. You do have some pretty outsized moves possible in this, and if we get nice and volatile, it's all mapped out on the chart. We know where those ranges can go. Sometimes they can happen in a split second.
And fundamentally, Powell, I don't know if you were listening to the Senate Banking Committee, he did say that, rates need to come down, that, that mortgage rates he was speaking of mortgage rates, but to get mortgage rates down mean that his rates have to go down, right?
Right. And then
that's good for small businesses. That's good, great for the, small cap bulls.
Right. And that's where that's why I want to be when those rates do finally come down, and we can see that this is kind of the turning point. Something needs to give here. The other thing is kind of looming, and this is kind of counterintuitive, but it makes sense. Housing market's not going anywhere until the rates come down. Period. Right. We're looking at potential.
Zillow has earnings tonight after hours. I'm going to be watching that for that channel. It's a great spot to get a channel check there. I love Visa and MasterCard. Give you a great look at retail all the time. You can find out what's going on there. For me, watching Zillow, what do they have to say about home sales? Because it covers the whole country. It covers all the different sectors. It does business and consumer. So definitely we'll be watching there, not so much as for a stock trade, but a channel check for the housing market as a whole.
Agree. And, I was looking at reversion on this not too long ago. I didn't put the line on, but about $95 is where it could go for reversion. This is market structure at its
decent earnings today would send it right there, I think.
Yep. And ideally, if rates come down, cool. I can see the market heating up a bit, and we are going into spring, so that's kind of ideal if they're going to do it. But if they don't, the other kind of springboard, if you will, what are the chances that we abolish federal income tax? Would that offset enough disposable income for people to start buying houses again, even at 7.5%? That's a question. That's hugely political. We don't go political, but it's there.
I can't imagine that is. We're getting to that point. I think there's a lot of different pieces that could come before then that would lead to other things. Let's see them take the taxes off of hospitality workers, taxes that tips that he talked about. Let's see him not tax American crypto as he talked about. Then we can get all the way to income tax. Because here's the bottom line: is tariffs just replace income tax, and it's no net win there for us.
Right.
It just would cost, if you wanted your iPhone instead of being 1,200, it'd be 2,600.
There is one potential theme, and I have wheel traded this before. I don't have a position right now, but I've noticed that there's been an uptick in the volume and options on it. And this is, if you want to practice a wheel trade for very little risk, this might come into play soon. Along the lines with BITF, I'm still in that one currently at a 41-cent cost basis overall. It's been slow. The volume fell off a bit, but I'm still in there. But one I'm watching for kind of both a canary in a coal mine for housing, as well as a potential for a decent wheel trade on market structure, eventual slow uptrend take, is OPEN. Open Door, as you know, they buy houses and they attempt to flip them. Well, Zillow got caught with the wrong side of that not too long ago, a couple of years back. That was a great short. I definitely enjoyed that. But these guys literally started out doing exactly that. They're in the business of flipping houses. They want to, buy low, sell high, rinse, repeat. And sometimes they'll put a little money into them if they can. But here we are at a point where interest rates are too high for the market to really heat up. Buyers are like sitting on their hands, or they just don't have the means to deal with a 7.5% interest rate. And there's a couple of big blocks in the room that can move that around. Whether I kind of doubt the federal income tax will be knocked off or anything like that, but I can have my doubts. That's just an opinion. Anything can happen in this market. And then weigh that out with, will the Fed lower rates? Well, there's two big pieces sitting here hovering over things. At any moment, one of them can go into play.
Sure.
So long term, if you look at basic market structure on a chart, well, you can see these guys, they had their hype wave, they had their capitalization, they had their reversion, further capitalization, a full move down. Now we're along the consolidation period where it's going to take forever for this thing to consolidate. But look left. Do you see any reverse splits on there? No, you do not. So they're still intact, and we're still crawling along in market structure lows. I haven't looked at the news on this. Maybe they've announced that they're going to do a reverse split, but I doubt it. But long term, this has a pretty good outlook for trading range, and I can sell premium and compile a very large position out of a small position in the meantime. And it's just starting to heat up to where you get enough volume to be able to sell some couple week expirations at $1.35, $1.40 a share. A 10-cent income on premium is pretty significant for return average percentage.
Yep, absolutely.
And we know that we can own things like this for free in a very short order. I've done it before. I did it in the primary way back in this curve here. So it's doable. You just need to be patient and wait for the opportunities. And we're starting to come into the edge of that might be an opportunity in the near future. So if you were looking at this from a consumer standpoint, a lot of people love to have the idea of investing in income properties, and at the same time, through market plateaus where things are kind of flat and sideways for a while, where it's not equitable to flip your equity and move into a different property, you rent it out. Very similar to the wheel trade. You're literally taking a position, that's your long position, and you're investing in the equity. And if it's going sideways, if the market's not taking it to new highs and running it up for appreciation, you can rent it out.
Yep,
Same principle applies. So if you're even remotely into income properties, you can understand the wheel trade and run with it, and that works out great.
Exactly. I love that analogy. It's one of the best out there. That's what you're doing. You're renting out your stock for income. That in something that you have long-term conviction on, that you want to own at least 100 shares of down the road. And as a little side note to that, Jeremy and I will be doing a podcast based just about that. We're going to look at a few different companies and set up wheel trades and tell people how we're doing it and show them how we're earning the income off of that, based on some Bitcoin stocks, some other tech stocks, and some of Tuttle Capital's leveraged ETFs, where we want to own a piece of those long term, right?
Yep. I promised him. I said, if you bring me the liquidity and you bring me weeklies, I will be there. I'm not going to break that promise anytime soon. So I did get into
Absolutely.
NVDX. I'll eventually get into some of the others, but
I'm
that's
into MSTU. I started my MSTU position.
nice. And that's got plenty of premium in it. I love the percentage
Okay.
on that one, even versus NVDX. It's got an edge. It's closer to like 12.5 to 14% per leg. Puts in calls. You combine those, that's anywhere from 20 to 30% reach. That's crazy.
Yeah,
Monthly yield, nuts. Even the position
absolutely.
I'm in with NVDX, it's already in a 20% yield position. Damn near it's like 19.5, but close enough. And that's
Yeah.
and that's 2 weeks out. you know, that's not a
Yeah.
month. That's pretty impressive. I love that. But you go into something where you can also keep tabs on the market, and eventually they say like you could trade one stock and only trade one stock forever. And the more you get to know it, the more you get to understand how it moves and how things progress in the world of finance in general. Just using that as your canary or that as your litmus test, right? Or your control, whatever you want to call it. But once you start understanding how to accumulate in a time of accumulation or time of well, not after capitalization, where you're starting to see the bottom is starting to sideways out and eventually curl up, you get an idea of having your thumb on the pulse of the market in the same sense. And it goes for every equity in any sector. It's all about the same. You're looking for that rotation. You're looking for that edge. You're looking for the ability to buy while everybody else is consolidating, and you can be compounding while they're consolidating. That's the idea.
Absolutely.
So
Yeah, I mean, you can sell out of the money calls in those areas, out of the money puts, and collect the premiums as it goes sideways in general for the consolidation, and then waiting for that eventual upstream accumulation zone to really get in a bigger way.
right, and more than anything that I've noticed from it, from a personal standpoint, is it always points right back to market structure. And the general market structure chart, it can be found anywhere on Google, and it explains. You got the news that drives it up, then all of a sudden you have the capitalization, and you have accumulation, and eventually you get a trend. And we've looked at PayPal, SoFi, and Square, and they've all kind of followed that pattern, and they're in that point, all three of them, where they can start building into a trend. So let me look at those real quick here. I'll start with Square is now XYZ. I forgot they changed their
Yeah.
yeah eventually. So you look at the market structure. There's your big old rounding bottom. There's where you expect your bull trend to be, and it's playing through. I mean, we're just tapping on this resistance area over and over and over again. And eventually, if things remain good, it'll go and trend on up for first reversion, second reversion, and all that stuff. It eventually revisits every zone from the previous capitalization trend. In the meantime, you could very easily wheel trade this. You can sell premium on either side of this range and sit
Yep.
there and compound a position bigger and bigger and bigger until it makes that break. That's why we even talk about it. So,
Absolutely.
but from a swing trader standpoint, once you understand market structure and how it works, you can also make some pretty killer trades. You can go for minimal risk debit spreads. I like that idea of risking very little. If you're wrong, you lose a little. If you're right, you win big. I love those.
Yep.
I call them YOLOs, but they're not always just a YOLO. It's a if you're right, you're really right. If you're wrong, you're only a little bit wrong. It feels good.
Absolutely.
uh, into a couple equities, I'm going to review some of the callouts we had from last week, and then we got time for a couple additions from your end. I know you had a couple to talk about, but I want to revisit a couple that are important to our motif here, so to speak. Starting with AMD. It's damn near met our bear target for Matthew and I have been both been bearish on this whole trend up to about half this measured move. I bailed here and he did too. We took one last scalp. I took one last scalp on this pop, but that was it. I'm done with it now. But I'm looking at this longingly. I wish it would hold here and give us a bullish reversion, and maybe the genie's listening here. I don't know. It's starting to show some signs of it could reverse here. What's your take on that particular chip on AMD here? I know that company wise they got some issues in
Yeah, they have some issues from a fundamental side.
right,
That industry is going to continue to grow, but they are probably not the alpha in those groups. So you'd
Right.
more be looking at them as a sympathy play, in my opinion. When you see an Nvidia move, they'll follow suit sometimes after it. That's more what you're looking at right now, till they can make some more decisions that excite people. Right now, they're just not a very exciting company. It's the same as
No.
Intel. Same, is another one that doesn't really excite you very much either. Even with the amount of money, all the infrastructure money going into it, and it's not moving it. It makes it tough.
And I can still remember back in the day, trading that range from like 9 to 11 with the wheel trade strategy back then when I was first learning how to do it. Yeah, I got taken out too early, but we could be coming into a point where we may wheel it up here in the same manner. Just let it, while it's boring, sell premium.
Yeah, if it gets boring, or right now it looks like it want to come down to that 90 area maybe to get boring.
Right, right,
If you zone out, look left a little bit and say, does it get back into that zone? You can see how long it traded sort of in that area right there, right?
right.
So, if you can get back into that zone, that's where I'd more be looking at it personally. I'm patient on some of these, especially where, like I said, where it could be, you get some volatility built in because it is a semiconductor chip company.
Right.
But where, market structure says to me, that's where it's going to trade.
That's where you're going to be looking. And that's it. I mean, right now we're looking at potentially a reversal here, but if it melts down through it and it fails, well, we know where the next level is. So we can wait patiently and bide our time and essentially wait for market structure to do its thing. It will come back around. It always does.
Yeah, otherwise it's got to break through that liquidity zone that you have highlighted there at the bottom that just broke down the wrong way through.
Right.
And, and then prove to me it can hold above that. Then I start to say, okay, now we're talking, right?
Exactly.
It's got to get above that, hold above that, test that zone. And then now we're talking. So those are the things, from a technical side. And as we know, it was interesting. Yesterday I had on a gentleman, Mark Petrino, who used to be a trader for, Steve Cohen and some of the big boys out there, and now does his own stuff. And he's a CMT.
Right.
And he's explained, this is where, you need to get it to get through that zone so that you have buyers that are confident in it. That's where they buy back in. Okay. Like you said, you sold out. You got out, you let it play around here, because if it breaks down, you don't have asymmetrical risk in your favor, right? Because you
Right.
don't know where the next bottom is, or the next bottom's too low. You are going to look when it hits that 116 area, right,
Yep.
to get back in. So is everybody else. This is psychology. It's a chart, whether it be for gold, Bitcoin, tulips, or Nvidia. That psychology plays into all of them. It's why people that learn technical analysis like you do and teach it, that's why it's so important, because it travels to everything.
Right. And I love to take it beyond that. I even go to so far as to say I like to simplify it and just draw
Yeah,
boxes. I don't have to care what to call it. I just have to be able to dance when the song comes on. So
absolutely,
yeah,
absolutely right.
and yeah, you can see, like, there's the old price discovery and probing discovery zones and all that stuff, and you can there's 100 different names you can put on stuff and labels, but realistically, I'm just looking at the chart. I'm looking at the price action, and if it tells me I'm likely to see it excel here, cool. If it's not, I can look elsewhere. There's plenty of other things to trade. You know,
Absolutely, no trade is a trade.
yes, cash is a position. For me, it's a little less frequent, but yeah, cash is a position. um, moving into one other sympathy play real quick. Not that one. MU. Damn, my dyslexia at that one. I gotta sleep better. Scenario in this one is it kind of hit the support range. It came back through the LZ, and this is an example of what I want to see with AMD. Not necessarily the same chart, but a sympathetic play. I want to see this kind of trend here. If it can't trend here, I don't have to trade it. But we're watching. We're always watching. Um, Another couple of gorillas. Let's go into a couple of different sectors here real quick as we breeze through some revisits. Amazon is one, and I've labeled this the trap detector, and I've been teaching a little bit about it too. I actually have a video I put into advanced charting explaining the trap detector. I used Google as an example, but here we are with Amazon, the same thing. Anytime you see a wedge, take that half of that secondary impulse, stick it on the angular, and lo and behold, liquidity trap was sprung. Bam, got shorted back down. In the long term, where's our target? Well, coming back between these two measure move blocks, and Amazon's been on a tear it needs to pull back. That parabolicness is insane. You know, we rarely see a 2-for-1 measured move, let alone a 2.5-for-1, and here we are. We damn near hit the 2.5-for-1 off this floor here. Um, Trend over? No, it can go parabolic and be irrational forever, much longer than you can be liquid, as they say.
Absolutely.
But for now, we have targets and we have them everywhere, and they're tradable. So now we've made the move back to support between the two blocks here. And yes, the trap detector worked flawlessly on this one as it did on Google. And that's one to kind of pay attention to when everyone else is looking at a bull flag. Be the skeptic, and knowing where that zone is ideal. And that's just one of many little tricks for price action analysis in a simplified manner to play it onto a chart and just draw pictures and know where those zones are. And then dance when the song comes on. That's all.
Right. Absolutely.
um, a couple others to mention. CrowdStrike, my gosh, that thing's still kind of oozing on up to our targets here. I called this one out in our community as well as put it on our socials for targets here, and it's pretty much playing ball with that, but it's stalled in the upper edge of between 3/4 and a full measured move. And if we close this with a doji today, we could test support on this one. So be nimble if you're in this. We got long back here on that break, and we took some profit off in this move, and then here we're waiting to see if this is going to continue higher or not. So we have a trailing stop ready to take us out just under that around 424. So my position anyway. When I say we, I mean my. Maybe Matthew's still in this one. I don't know. I didn't get to ask him today, but yeah. Um, so with this guy, we're pretty much our accuracy is just. I mean, I'm not even going to brag about it anymore. We're good. Let's just call it
Yes,
that.
you guys are.
So we're in this area of interest. We can continue higher, but again, and I say this, find your reasonable target. It doesn't have to do anything. And if we had a flash, all of a sudden the news popped up and it wicked exactly to this level and pulled down, and your limit order didn't get triggered here. This is why you have runners, and this is why you have an eject button. And sometimes you can
Yeah.
automate that.
Well, right. Like you're saying, you want to have a stop loss in place in the market we're playing right now
Oh, definitely.
because, we're in the time where half measured moves come quickly, full measured moves happen more often than not. And that isn't normal, right?
Right. It's just outside the edge of normal. So when
Right.
things are being oh, what's the word here? Unreasonable, be reasonable.
Yeah, no, absolutely. You can always get back into a trade. I think I've learned that a lot from watching you here. You do it all the time. You have no qualms. It's very important. In that wheel trade technique that we talked about, one of the things I talk about is how much is your money, how long you're going to hold your money up to make this trade is a big part of it, right? You're renting
Right.
out your space, got to make sure you're getting enough rent.
Yep.
These things all take into account right now, or the market where things are getting close is again, I'm not going to try to pick up that nickel to get that in front of a steamroller, because when they
Right.
turn, one tweet right here can send it down, or earnings, right? And it's not just their earnings. CrowdStrike would get affected by so many different things. If one of the airlines comes out with something and one of theirs just about the outages last year, it could drop the stock, right?
Absolutely. In a heartbeat.
Yeah.
And that's the market we're in right now.
Yeah.
Um, Another thing, and we've been talking about the wheel trade too much in this, but one more thing. Options positions are not just a certainty; they're adaptable. So if you want to protect downside risk for a minor cost out of your profit, you can, and you can actually morph a wheel trade into a collar on a drop
Sure.
of a hat and have it as a credit collar. So it's not only protecting your downside with a long put, you're getting paid to hold that put instead of paying for that put.
Absolutely.
So when it comes to being able to add some complexity to your positions, it's something you really got to learn, and it's going to take some coaching. You're going to have somebody help you with this because it's not something that's natural for most people to be able to take a position with a almost hard set bias in everybody's mind. Everybody's got that bias. It's like
Yeah.
FOMO. It sticks. You got to be able to defeat that. But above all, you got to have the skills to be able to adapt to market conditions. And if you don't, you get put in a bad place and usually quit. So,
I was about to say that's when they burn out
yeah,
or crash out because all their fishing rods are on one side of the boat. So when the boat tips to the side, the other side they get wrecked.
exactly.
That's why we always talk about some simple ones. I hear you guys talk about it here, but for me, it's VIX. Every time it gets down below
Right.
15, below 16, even, you should start to look to buy some, later dated calls, right? Because what happens eventually, it's going to go to 2023. We know it. It's just the way it's built. Buy volatility when you don't need it.
We used to be able to look in on like even Warren Buffett would have these as pretty much public. You can see them happen when you see the option sweeps. When you analyze it enough, you know where the collar is, and you know where all the smart money collars are. And when they
Yeah.
start putting them out, you can pay attention to those levels and take advantage of it. Or you can also utilize it. And you can be instead of trading contrarian to their beliefs, you can trade on their coattails. So knowing where those collars are, you don't have to mimic their exact collar. It's going to depend on your position and your cost basis, but it's there. It's an option that you can adapt to, and you can completely adapt an existing position. So like if you're in a wheel and you've got short calls and short puts out there, it's really easy to morph it into a collar. It doesn't take but a couple of keystrokes, really, or a mouse click, if you will.
Man, the Powell put is in play today. Since
It
he's
is.
been talking to the Senate Banking Committee, we've dropped down from 529, 526 here.
Oof.
Man, straight drop on the Qs.
Q's rolling. I'll get to Q in a moment. There's one other thing I want to look at real quick on this leg, snow. We, we
Yeah.
we talked about this one last week, and this one's one of my hopefuls. I like this big old gap move, and we were talking about this before. Not all gaps have to fill. Sometimes they're a primary in a measured move, and it's looking like that. We're in the liquidity zone. We've went A to B and back. We're at support now. If it holds here, I think Snow has a pretty good bias to remain bullish, at least to have a move up here. But look further left. There's the gap you want to fill. How about
Right.
that? Our measured move fits it precisely, and I didn't even have to try. So keep an eye on this liquidity zone. If we hold here, we got a pretty good shot of maintaining some bullishness in there. And comparatively, Snowflake and Crowd seem to kind of chart similarly in that respect. They don't have the same exact fundamentals, obviously, but price action wise, they tend to follow. So I like to kind of keep an eye on them. And then to throw an even more mixed up boot in there is look at AI. It's a very similar beat to it, so to speak. And this is kind of the setup. We're looking at this LZ here, kind of if it holds, cool. It's also a half back on the previous leg here, and if this then that. Just watch this zone. 182 is where I'm focused, and if it holds that, I think we got a pretty good shot of at least going A to B in the zone again one more time, hitting resistance. And if we break out of it, cool, measure, move on, baby. The car continues down the street, and you get back to your street hockey game right here. So
Yeah.
keep an eye on this bad boy. And then the other one we kind of wanted to hit. Let me get back to Q real quick so I can get some short term stuff on that. I'm in another position too. We're looking at angular support test on the 2 hour, and that's where I'm kind of keeping a close eye on this because we know that JPOW can flip his script as fast as your tongue can move, man. It's stupid fast, and if this closes a nice wick here, we might get an opportunity to scalp that back to a fib reversion. So keep an eye on that angular right here if you're day trading this. Sometimes I'll day trade Powell, sometimes I won't. But today, while I'm not broadcasting, I'm definitely going to be scalping it. I might have one of those days where I'm scalping all day long. And then a couple other follow-ups. Let me see here. Last week we were looking at Apple, Talon Energy, and VRT. They did follow through to our targets. Apple did precisely that. We got right to that LZ where we're talking about being the half back move. It's done. I'm taking my profit off here because I think Apple's got something coming in the pipe. I don't know what it is, but the chart's telling me beware because it didn't quite make the full swing onto the measured move here up here, and it rejected just above half a move and came right back through to support. I almost think we're going to see some compression here, and this will probably flag out probably well into the end of Q1, and we might see a break move at some point, but it can go either way. So if you're an Apple fan, I know Apple's something everybody wants to own. Take advantage of the volatility here. We're going to have some good scalp targets to play in between. But if you're long this thing for years and years, the buy and hold type or even the income strategy type, beware that something feels about right to set up a break somewhere in this neighborhood. So be on your toes with that one. Talent Energy, that thing's been just a giver. This and a couple other energy stocks, but we're right to target. We're playing with it as support and resistance range here, and we've gone back and forth on this one. It's waffle time, and everybody's going to be in waffle time on this one, but I'm expecting a channel trade on this one for a little while. It needs to accumulate. It had one of those too far, too fast moves, in my opinion, and it's been parabolic all the live long day anyway. This is where I'd expect a wedge, so we're pretty much done with this one until it makes the next move setup. VRT was another one we talked about for short-term scalps, and that one's met target as well. There's the reversion, and back down to the liquidity zone we go. So just to revisit a couple of those, if you guys took those trades with us, and we never give these advices. We tell you what we're doing, and it's up to you to make that choice. That you're the trader. So
we don't touch that button. You do.
No, that's right. So we have nailed every price target we called out on this thing, and now we're done with it. Wait and see. Let's wait for the next setup on this guy. I just like to follow up on these to show you, not just to brag about us hitting the price targets, but to show you that we're in wait and see mode. We're out of it.
Yep.
Going into maybe a couple more before we get signed off here, but Microsoft. Man, I know that people say they're in trouble, and along with Google, I know the writing is on the wall. They spent a bunch of money in AI and some into the quantum computing, this and that. The fundamentals are all over the place with these guys, but generally price action has been pretty much on point with this guy. We had our, I call these the widow hourglass because it kind of resembles that. You get a wedge and then you get a broadening pattern. Look at the big picture though. One big old diamond is coming to a point after the extension in the channel ranges. This is where the regression line would be here if this was a diamond. And it pulled back and it's entering the angular for the bear channel side here. Is Microsoft in some fundamental trouble? Maybe. But if we're looking at the right zones here, there is some liquidity to be had right here. You can see on these are weekly candles, so use these with a grain of salt. But I'm going to draw the box anyway. An area of interest for me is going to be right in here, and I'm wondering if we're going to hold that range or not, because if we break it, we got all these targets to revisit back here. So we may end up being a little bit more bearish on Microsoft if it melts this zone. So be cautious on this guy. What's your take on Microsoft and on you guys' end?
I mean, the thing with Microsoft is if you bought it a year ago, you're right exactly where you were when you bought it a year ago. So, you look at the Mag 7, that's not a great thing to be able to say, unfortunately. As you said, from just a market structure, it's got pretty good support, but you still got, if it breaks down below, I actually have I think I probably got it when you guys were doing it on the show one day. I have the 2 measured move and made up starting on November 4th, still in my chart I'm looking at here to the right. And, that zone's been a pretty good liquidity zone. So, if history tends to repeat itself like it does, this is a good spot to buy it, quite honestly. I'd be looking, for me, what I like about it is asymmetrically, I know if it breaks below 400, we're done, right? You got to be out of the trade. So, if you're getting into it right now at 409, at 400, I want to be out, and my take profit's going to be somewhere in that 440 zone.
Agree. And there's a liquidity zone to the north here at 419,
Yeah, so
420.
that's what I mean. So that's that 420 maybe I would take half profit there,
Right.
and then I'd be looking to see if it can get back up to that 440. So while fundamentally I'm not a huge fan right now of Microsoft, what I like is they just had earnings. They tend to get beat up on earnings because their capex expenditure is so big.
Oh, yeah. That
And they're
scares
not
people.
exciting. They don't have Elon, doing it. They're pretty boring in that thing, but you just had earnings, so you're out of the woods for a while. So this is actually a pretty good place to maybe dip in the water. And like I said, more based upon the asymmetrical setup at 400, or even on yours 405, you should be out of the trade if it breaks below that, right?
Right.
So I'll get in that for a move up to 420. That's a pretty good move, and
It's
asymmetrically in your behalf, because at that point I wouldn't be fully exiting. I'd be seeing what it does in that 420 liquidity zone.
right. And you got to also realize everyone else is seeing a bear flag here. I mean, it's
Yep,
it,
man. This is one being on the other side. It's one
right,
of those ones where you go, oh, how did I not see that, a month from now when
right.
Microsoft's trading back at 440, and you said I should have bought it at 409, and why didn't I? Like I said, what I like about it is I know my trade. It invalidates at that 405 for me, 400 levels, what I'm looking at as the invalidation. So I only got that percentage to the downside, and on the upside, I'm really looking at that 425, 200-day MA would be where I'd start to be doing my first scale out. So that building that in isn't a bad little spot there.
Right.
That's a nice little trade.
Yeah, it's got that potential. I mean, I've seen many bear flags fail at exactly this same scenario where you got that range of accumulation that's kind of broad and stretched out for a long time, and then everyone else sees a bear flag. Oh my God, short it! When there's blood in the water,
Yeah,
there'll be some big
that's
fish
it. If
buying.
everybody's fishing on the left side, I might put a rod out on this one on the right side, because I like where I know I'm going to be pulling my rod out if it's not there. If I don't catch a fish before 405, I'm pulling my rod out, so I'm not losing a lot there. 1%, 2% to the downside for
Yep.
a 5 to 10% upside is a pretty good asymmetrical look from just buying a stock and not playing with options and things there.
And I always look at these bear flags. I call it the pop and drop scenario, where you had the liquidity grab it, nailed it, and it just textbook bear flag right there. But they never followed through beyond the support level. So we're tapping it here and here. So this is a point where watch this. If it starts to make some bullish moves here, you can have a little bit more trust in that move as
It's
opposed
also
to
where
like this
algos
guy.
will start to buy. Remember, this
Right.
is Microsoft. We're not talking about, Jimmy John's, sandwich shop.
Right.
So the algos are going to set in at that 400 level, as it is, in my personal opinion. Again, nice round number, 400. Algos start to kick
Great.
in at that level. We'll push it right back up. And you'll see it in that wick, because that's going to be an immediate wick, right? Algos don't do it little by little. They go quickly and fast,
Yep.
quickly and strongly in that direction. So that's what I said. That's why, asymmetrically it's set up for a decent trade.
They scalp a little bit like me on a one tick Renko chart.
Yeah, there you
They're
go.
quick. I'm not quicker. I'm not worthy, but I can ride their coattails. Looking at maybe a couple more. We got time. We got 10 minutes here. Man, cool. We're timing this just right. Um, Palo Alto was one we talked about last week, and it kind of did melt that liquidity zone we pointed out here. It's above the halfback, but I still don't like the chart. Although there's a primary move, I'd like to see it test support one more time in this range, and then maybe um, this is a big if. In fact, I'm going to split that range here for the primary move. If we get into a bull mode, and you can see we've hit the half target and rejected cleanly here, I'd love to see it test support here. If we get back above 198 here and get some reasonable bulls in the trend here, we got a pretty good shot of following through for a measured move. Of course, paying attention to, I'll mark it as an LZ, but it's really also a fib level here. That's that 86.6 fib with a high right there, that wick. So pay attention to that. If we see rejection there and a trend that follows through after another test here, we could see it hit there. But Matthew and I were both into this for the long move back to liquidity, and this is where I took a a primary and a runner position in this myself. I took the primary off right in here at the top of the zone, left a runner on. I'm out of the runner today, this morning, after we saw it hit 196 and started to fade through 196.50. It was time to just get out of that. So I'm out. I hope Matthew followed through with that one because he was in there too. Looking at this with a tweezer top on a 2-hour chart kind of seals that deal, and that's where I was looking at that candle to break through that support level. So this is a great time to wait and see what happens next on this. I'd love to see it come back down here. I'm not going to short it, but I'm going to wait patiently. If it holds this area and starts to bounce back, go for the bull move. It'll go and reciprocate that move for a while. It gets choppy and rangy pretty easily in those zones, and you can see it's happened before. So it's a pretty reasonable setup. Just keep an eye on it for a few days and see where it ends up for support. What was the other monkey in the room? Oh gosh, China. Do we want to go there?
So some of them, except for PDD, they're holding up pretty well. BABA is holding up, or at least it was. Yeah, it's up 2.68% again today. So it's taken off. That's that's headed towards all-time highs again. I mean, I just have trouble. I know Matthew has some views there. I'm a fan of the Japanese market, not the Chinese market. I'm looking at the trading houses in Japan, SFMG, some of those that are sort of where Buffett goes when he's looking for alpha out of Japan.
Right.
Over the years, I don't trust China right now, and I think that we are going to get into a trade war, and I think it's going to cause problems on both sides. And we saw it today. Temu has been down. I think PDD is down. They're actually up now, so now it jumped up. But which makes no sense because they announced that they had to change how they were shipping to the U.S. They were avoiding tariffs by doing some bulk shipping to Mexico and then shipping from Mexico to us. That has been carved out. Trump said no to that.
I love those gray market deals.
Yeah, so he's going to show that. So that's a very costly supply chain issue. Yeah, I mean, I guess the play is if they shut off our markets too, they have to buy their own stuff. Is that the play that Matthew's sort of looking at on that?
I'm thinking so, and I'm kind of I'm hanging out on more focused on the technical analysis side of it myself. But I looked at TSM. I'll look at BABA and stuff and JD and all that stuff later. But TSM doesn't lie. That deep sea drop was awesome.
But TSM, while it may eventually fall into China, is still a free country at this point.
Still for now.
Yeah, so I don't because we would, especially TSM. I mean, that is as close to a U.S. backed company as you're going to find overseas.
Pretty much, and it's for me, it's the best canary in a coal mine, so to speak. If you start to see TSM having trouble, both markets are in play. And the deep sea drop
looks a little bit like your snowflake chart, doesn't it?
Kind of so. And we had the deep sea drop. We're right back in the middle. The reversion trade's done twice. I mean, I scalped the crap out of that reversion trade twice, but now we're looking bullish all of a sudden out of nowhere. And there's tariff news on the horizon. That's what's kind of weird to me. So I'm looking at this like, well, if we wedge here and we can get impulse here as a trap detector, the angular, I'm going to draw just the angular and the box here. But we're right up against pushing that angular. And if we get excitement in here, let me grab, I'm going to imagine where my regression line would be. It'd be right about here. So let's grab this that's a big block, guys. If this thing gets nuts out of angular resistance here, we got a pretty good shot of hitting about the 218 mark here, and then maybe a squeeze on up to the new high at like 228. It's possible, but let's pay attention to the monkey in the room running all that. Is all the tariff stuff, and it's already being seen as either redirection, misdirection, if you want to call it that, or more or less just saber rattling. Hey, look at this, and I'm going to shake my fist at you. You're going to shake your fist at me, and eventually we're going to come to a compromise or a deal.
Right. And again, Taiwan is not one of the ones he's targeted yet.
Right.
So I would also point out, to me, NVIDIA, broadband, TSM are all sort of tariff proof, because the bottom line is people will overpay. You can't even get a Blackwell NVIDIA, the new cards. People, we know Elon spent, I forget how many millions of dollars in premium. It was over $100 million in premium to get the NVIDIA chips he needed, the Blackwell chips for Tesla. So, they're sort
Right.
of resistant to that. It's the steel, the things like that you'll look for a secondary source. There is no secondary source. There's no American made semiconductor to replace an NVIDIA chip at this point.
Right. And I'm going to make a strange comparison here, but it's going to make sense to you. So when I look at TSM, um, and I take it in parallel to the general chip market, I compare it to the way Australia looks at copper for their market. It's very not the same exactly, of course, but it gives you a litmus test of what to expect in general. So if you want to scalp the volatility on the China market and you want to scalp the volatility on the US chip market, look at TSM and it'll give you the bias. So you can use TSM as the canary in the coal mine to give you the clean signals. And then
Got
you
it?
can change your trading perspectively on the chips from the US side and the China side. So it's, for me, it's a general look here. This is where you can ignore both fists shaking sabers at each other and you focus on the better fundamental base, the stuff that's actually going to mean something. So that's what I'm getting at with it. It's sort of the same as Australia looks to Dr. Copper for their general dynamic, financial markets litmus or canary, so to speak. They kind of watch that. It just gets the attitude. It basically is a balancing force in the argument, so to speak. It's
Yep.
the I wrote that article called Relaxed Trading, and it essentially is this: you're the third person in a room. TSM is the third person in a room. Watching the argument already has a pretty good idea on how the argument's going to end, and then just wait patiently and calmly